One of the busiest sectors of the market recently has been retail. First, the unfortunate demise of Dick Smith, and then the big news in the do-it-yourself space with Woolworths calling time with its struggling Masters business and Wesfarmers in its first big international foray with a $700 million takeover of Britain's Homebase. So, what are investors to make of it all? I asked the founder and CEO of the retail doctor group, Brian Walker. Brian Walker, huge activity in the retail sector, of course. Let's start with the Dick Smith failure. What are the lessons for investors?
Well, I think that all that glitters is not necessarily gold. This was a business that Woolworths sold for $90 million. It was a business that expanded far too quickly. It was a business that was subject to incredible pressure, not just from domestic and international competitors, a la JB, online growth, but a change in the mix in which consumers buy electronics. So, fundamentally, the model was at best very mature. The market was then presented with this business at an IPO valued at over $500 million.
And do you agree with this criticism of gouging by private equity?
There's many words to describe it. Gouging is one of them. Let's just say a very ambitious positioning by the equity firms, and aggressive in the way they took to the business and the way that markdowns were occurring, and really presenting management with a pretty unsustainable agenda.
The other very busy area has been DIY, Woolworths' decision to ditch Masters. Now, Woolworths was involved with Dick Smith and, of course, with Masters. Are there comparisons there?
Well, it's an interesting question. And if we look at it, objectively as we can, we see a couple of similarities. Both in the Dick Smith example and the Masters example, there was a rush to expand stores, to invest and grow the distribution network. Now, partially because retail is about location, but partially also to increase investor demand and to have a really serious crack in the do-it-yourself business at the Bunnings business, the successful Bunnings business. So in both cases, Woolworths were at the tiller of a very heavy expansion program. With the benefit of hindsight, they might have been more prudent.
And what's this all going to do to the market? Because presumably it's not just properties for sale, but quite a lot of inventory.
Well, that's right. It'll make Bunnings that much stronger in this country. There's a lot of speculation out there that at least 50% of Masters sales, which is about 750 to a million, will fall neatly into Bunnings. So it's a good news story for Bunnings, really.
Now, some folk might think it's rather ironic that Bunnings, or rather Wesfarmers that owns Bunnings, is right now deciding to buy into the British market with the number 2 player, Homebase. They're not risking creating a Masters problem of their own.
Yeah, well, there's a slight difference. In the Woolworths Masters acquisition and the story that we know so well, and the same with Dick Smith, Woolworths were investing in something that wasn't really central to what they do. Here we have an example of Bunnings building its hardware pedigree internationally against a business in Homebase that they've acquired, which is underperforming, very low sales per square metre ratio, and a marketplace that we believe has a strong demand for the hardware sector.
Homebase is a bit of an Arthur Martha, isn't it? I mean, it's got the DIY, but it's also got higher-end furnishings with its own acquisition of Habitat.
Well, it's an interesting one. Again, if we look at the Homebase business, premium offer, as you say, linked to Habitat, large space, low performance ratio, and really playing in that premium end of the market. Here we have Bunnings, huge low price retailer, depth, width of range, positioning, very much about high customer service model. The key elements for Bunnings to be successful in the UK, in our view, are firstly to crack the piece that says Australia is a do-it-yourself market, Britain is a have-someone-do-it-for-me market. And once they sort of can break through that, certainly with their ranging and their pricing, if it's as competitive as it is in Australia, and then thirdly, lifting that customer service level.
Presumably the tradie market will be a very important market for them to crack then.
It is. The tradie market's a key market. It's been a strong, pivotal element of the Australian growth. It's something that Masters never really cracked. And it's very, very important that the tradies in the UK that traditionally go to the high street specialists start to move to this new Bunnings in the UK.
And sausage sizzles?
All part of the mix. Local community support, sausage sizzles. And as Richard Goyer says, and the board is saying, we're going into this acquisition with our eyes wide open. They're very, very competent retailers.
And what about Woolworths now? I see it's been toppled as Australia's #1 brand by Telstra, and it's now taken on Saatchi's for a new marketing look.
I think the message from Gordon Cairns and the board now is let's get back to our knitting. Let's get back to what we're known for. We don't want to divest out of Big W. We want to be seen to be very much in the core supermarket business and the discount department store business, the Big W business. Let's not play in too many other areas where we don't have expertise, core expertise, and it's foreign sort of playing ground for us. So I think that's the message. Interesting to see the slip in the brand profile. Not unexpected, tumultuous period for Woolworths in the last 3 to 5 years. A marriage of investments that have gone wrong, fundamentally, probably some hubris about being, just bigger than they needed to be and more successful, and really ultimately not playing in categories where they had the expertise.
So do you expect Woolworths to be back on track this year?
I think that it's an 18-month to 2 year period minimum to really get back on track.
Brian Walker, it's been very good to talk to you. Thank you very much.
Thank you. Hi, I'm Brian Walker, CEO and founder of Retail Doctor Group. Knowledge is power. Visit us at retaildoctor.com.au to sharpen your competitive advantage.